Tesla stock has rocketed higher year to date 2023, up around 100% and clawing back a lot of the losses from last year. You can see how over the past year, Tesla stock is actually closer to flat. The reason why it's jumped higher recently is on this news with General Motors, where General Motors is partnering with Tesla. So here's two competitors where General Motors is effectively saying, yeah, we need you for your supercharging network. That's a big, big announcement. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, we're going to talk about the announcement and what its potential impact could be on Tesla and where do I think Tesla stock could potentially go from here. If you enjoy educational investment videos, please make a point of hitting that subscribe button. So as we look at this headline, General Motors talking about more charging stations, less range anxiety, more sustainable journeys. They're not the first ones to announce this partnership. You also see Ford at the end of May similarly announced that they're partnering with Tesla to leverage their superchargers, gaining access to 12,000 Tesla North America supercharging stations. So this is an amazing story of, David slaughtering multiple Goliaths, where, it's sort of this recognition that not only did you get in front of these, behemoths, but you also created a better technology. And that's, well aware with the vehicles themselves, where you're like, wow, look at these really cool features, but also the infrastructure for charging them faster, better, more reliable. And so you're seeing this sort of admittance from the legacy providers, the legacy competitors, saying we'd rather use your infrastructure. And this isn't the first time Elon Musk has considered this path. This has actually been well articulated for several years now. Back in 2021, they opened it up a pilot program, their supercharger network, to other electrical vehicles, in Netherlands. And he was actually saying this back in 2015, talking about how our supercharger network is not intended to be a walled garden. So not just exclusive for Tesla, it's intended to be available to other manufacturers if they'd like to use it. He's talking about the only requirements that the other cars must be able to do is take the output of the superchargers and then pay whatever their proportion usage is. And so he's looking to accelerate the advent of electric cars, really the sustainable future. He's looking for sustainable, future and the electrification of cars. And this is an easy way, layup way to do it. And it's leveraging Tesla's infrastructure, their supercharger network that they've invested billions in over the last few years. And so now you see GM, why are they doing it? Well, partly to save their own money, where they're looking at it, they're saying, this could have cost us, $700 million, maybe $1 billion. Instead, we're going to save maybe around $400 million in terms of building out our own network and just leverage what Tesla already has. This does create the possibility of using more of a standard, the Tesla standard, the more North American charging standard versus the current industry standard of CCS. We'll see how that plays out. And it is interesting to think about, what is the impact for Tesla stock? Where does it go from here? What's the potential impact on Tesla's business? First, I recently, just yesterday, bought more of a stock that I think has over 300% upside potential that I called out to my subscribers at unrivaledinvesting.com. I also expect to raise prices soon, so now's the time to act if you'd like to lock in a favorable rate and take charge of your investment journey. That's unrivaledinvesting.com. In full disclosure, this is not financial advice. So looking at the potential impact on Tesla, previously Goldman Sachs had done some work trying to get, a range of what the impact could be for the business. They previously said, look, right now it's not really material, but it could be, maybe 25 billion plus in annual revenue for Tesla. And they did some sort of chart looking at, the number of vehicles charged versus the number of Tesla superchargers. And, the more Tesla superchargers you have and the number of vehicles that are being charged, then you could be getting, closer to that $25 billion figure. The reality is right now, Tesla is nowhere near, having 500,000 superchargers. What we're talking about is really closer to, 15,000 in North America, around 40,000 around the world. So, maybe you're talking about a couple $1 billion in terms of revenue, additional revenue that you could be looking at from these partnerships with GM and Ford. I'm not looking at this as like, oh, you're going to double revenue overnight. I think this is an incremental revenue over time that you're going to get with these partnerships. The question is, what do the economics look like with that, let's say, a few $1 billion in incremental revenue? Well, one investor asked this question last year, and Elon Musk responded saying, look, we're looking for around 30% gross margins, around 10% operating profits or profitability, all costs included. That is an interesting figure because it does reflect a little bit of a lower margin than what they're currently at or what they previously were, targeting last year. You were looking at closer to 20% operating margins. And, with software, they're expected to, with fully autonomous vehicles, it's expected to go higher over time. Recently it took a little bit of a dip with inflation costs, where their operating profits closer to 12%. But, it's interesting for him to say, hey, 10% profitability versus, what was previously 20%. So clearly not looking to make this just a huge profit center, but they are looking to get compensated for the infrastructure that they've built out with around a 10% profitability figure. We'll see how it ultimately shakes out, but these are very rough figures, talking about a few $1 billion in revenue, around 10% margin. When I check in with AI Ticker Chat, which leverages artificial intelligence to help answer, investor questions, the first month is free. So once again, that's AI Ticker Chat, asking about, Tesla's latest results, trying to understand this potential impact. In 2022, they did around $12.6 billion in earnings. So thinking about this, you're talking about an incremental boost to potentially, Tesla's results. You're not looking at something that's going to say, oh, this is 100% different. You're looking at, 10, 20% sort of benefit over time. I don't think this is hey, this warrants the stock going up 50% on this news. But it is, interesting to see how, artificial intelligence called out how their services and other revenue, Tesla saw a 60% increase in their services and other revenue, which is, why is this growing so fast? Because that's actually growing, faster than, other parts of their business, like their auto sales, a core part of their business and a bigger part of their business. Why is it growing so fast? Well, one of the reasons why is paid supercharging revenue. So I would expect to see their services and other revenue line pick up, with this announcement, with the partnership with General Motors and Ford. It's very curious to see how it ultimately impacts margins, but, that'll be in the quarters ahead. When I think about Tesla's valuation and where do I think the stock potentially goes from here? Currently, around $900 billion market cap, a bit shy of that. Thinking about its growth so far in the first quarter, it was growing around 25%. I'm giving them full credit for the year. I'm saying, hey, maybe they actually get closer to 30%. Maybe these types of deals actually help accelerate their business. You also have Cybertruck. You also just have a lot of cool stuff going on. So let's assume 25 to 30%. Maybe that's too aggressive. And let's assume 20 to 25% annualized growth in the years ahead. And thinking about this and thinking about profit margins that are well above where they currently are, because once again, they're closer to 11% now. And thinking about an end profit, end market multiple of, let's say, around 25 times earnings, give or take about, 5, give or take 5, let's say. So 25 to 30 or 20 to 25. You're looking at not crazy compelling returns. Effectively looking at a stock that maybe is up 50% to down 30% over the next 5 years. Now, it will be significantly more volatile, but this is what I'd argue is a fundamentally driven framework to understand, where could Tesla go in the years ahead. Now, it's hypothetical. Of course, Tesla stock can go way higher, way lower, but the key takeaway from this, I think if you are a mega Tesla bull, especially after seeing this dramatic 100% rally year to date, is that if you own Tesla stock at this point, you need to ask yourself, am I highly confident it is going to grow faster than 25% over the next 5 years? Do I think it will have significantly higher than, let's say, 20% profit margins in 5 years from now versus closer to 12% in the first quarter, and lower than that lower than 20% last year. So do I think margins will explode over the next 5 years? Do I think their growth will continue to compound, where they'll go from a $80 billion business last year to a $260 billion business at least, in 5 years from now? And so only in that scenario where you're saying, I'm very confident in 25% plus growth, and by the way, it should have a 30 times multiple or above, then do you actually get some, what I'd argue is a more reasonable or attractive return. And of course, this depends on, the execution. This depends on sentiment. If, they whiff on execution, if margins collapse and, Wall Street penalizes them, then I'd expect to see the stock price just absolutely plummet. And if they do better than this, then the stock price could do way better. But I look at this and I'm thinking, if you're a mega bull, you need to be highly confident at this price that they're growing faster than 25%, more than 30 times earnings, and much greater than 20% profit margins in the future. That is, in my opinion, that is hard for me to do. I'm sure some people will be very comfortable with that assumption. For me, that's just too hard. Based on this recent rally, I would be inclined to trim or sell if I own Tesla stock, just because I'm looking at this and this is not a crazy compelling, risk reward, once again, showing maybe 50% upside versus 30% downside. And, look, of course, things can overshoot where, things get really crazy and things get really, overvalued. Now, clearly, there's been a lot of execution here. And clearly, this is a favorable fundamental update for Tesla. Like, that should be crystal clear. But it is important to recognize that on Wall Street, you can have prices move faster than the fundamentals. You can have instances where the prices fully expect fundamental improvement and shoot well above it. And Wall Street can take a good idea way too far, and then your investment returns are actually worse over a few years. So I think that is an increasingly likely situation with Tesla as I look at this price run, year to date. If you have a different opinion, or you think you have a highly confident perspective that they're going to grow in excess of 25% for the next 5 years, I'd absolutely love to hear it in the comments below. If you enjoyed this educational investment video, please make a point of hitting that thumbs up, hit that subscribe button. Personally, for my own investment journey, I'm going to focus on things where it's easier for me to say, hey, you're already at these margins, or you've already shown that you're at you could be at these margins. And, it's easier for me to underwrite, growth, because let's say they're growing at 20% and I'm saying, hey, they're just going to keep growing at 20% or lower the next few years, and assume the multiple doesn't change and still get, 200, 300% upside. That's personally what I'm looking for on my investment journey. But I can understand other people, taking the assumptions here and saying, hey, I just want to be on, for this ride here because it's so exciting. Personally, once again, I would trim. Thanks so much for watching this video. Please make a point of hitting that subscribe button.